This is Invested in Climate with Jason Rissman. I see climate as the world's biggest, most diverse, most important movement in human history. Millions of people dedicate themselves every day to protecting the planet. This podcast shares conversations with advocates, entrepreneurs, investors, policy experts, and anyone else that can push our thinking about what's possible and what needs to happen to address climate change. If you have ideas for episodes or feedback, get in touch on LinkedIn. If you enjoy the show, please leave a rating on Apple or Spotify. I'm currently building a new venture. It's related to storytelling and how we engage all sorts of folks in meaningful climate action. If you have expertise in this area, big ideas, or examples of something that's really working, get in touch. Thanks for listening and for doing whatever it is you're doing to support climate progress. Okay, let's get started.
It turns out there are entire social movements at big tech companies like Google, Microsoft, Apple, where employees have been asking for climate-friendly options at some of these places going back to 2016, like before I was even thinking about it for my company. And they've done things like get thousands of signatures on petitions. They've sent hundreds of emails to HR. So it's an issue where a lot of people care. A lot of people want better options.
Hi, folks. Wright-Gladstein was one of the first people I interviewed when I launched Invested in Climate nearly 3 years ago. Our conversation has stuck in my mind over the years as her company, Sphere, offers one of the most impactful actions individuals can take to address climate change. The action is really simple: moving our savings out of fossil fuel companies. In the United States, fossil fuels are included by default in retirement savings accounts. If you have a 401k, IRA, or pension, you almost certainly are supporting the fossil fuel industry. And we're not talking about chump change. About 20% of fossil fuel market cap is derived from 401ks and IRA investments. Sphere makes it easy for people and companies to move retirement savings out of fossil fuel. They're currently raising money through a WeFunder crowdfunding campaign, and so I thought it's a perfect time to catch up with Alex and hear about Sphere's progress. Full disclosure, I'm a Sphere investor and soon-to-be customer, but I should say clearly, nothing in this episode should be considered investment advice, and it is just for informational purposes. I hope this conversation pushes your thinking in a helpful way. Enjoy. Hey, Alex, welcome back to Invested in Climate. So great to see you as always.
Thanks for having me back. Good to see you.
So you were one of my first guests 100 and some episodes ago. I'm excited to get to hear an update 3 years later, especially since you have a crowdfunding campaign right now, an open round. It seems like a great time to hear how things have been going and what's new and what the opportunity is. I should clarify before we go too much further that nothing in this episode constitutes investment advice. This is just for informational purposes only. So if you're intrigued about joining the crowdfunding round that we'll discuss, you should conduct your own research, seek advice from professionals, and exercise your own judgment when making investment decisions. I found that script online. It's really helpful that people have to say this thing commonly. With all that said, let's do a quick memory refresh. Tell us about your company, Sphere, and the problem that you're helping solve.
Well, I came across this problem when I was running my first company. It's called IR Labs, and it's a climate tech company. We're cutting the energy use of AI in half by using light to move data between chips. And when we started offering a retirement plan to our employees, I asked for a climate-friendly investment option in the lineup, thinking that it was a simple request. And it ended up taking over 3 years and a lot of persistence to get a single climate-friendly option, i.e. just something as simple as not investing in Exxon and Chevron, like the biggest names in oil. I couldn't get that kind of option for over 3 years for our employees. And it opened my eyes to how hard it is to do climate-friendly investing in 401ks. And I started talking to as many people as I could in the 401k industry to figure out why it was so hard. And I ended up learning that I wasn't alone. And it wasn't just other climate tech founders like me looking for climate-friendly options to invest in. It turns out there are entire social movements at big tech companies like Google, Microsoft, Apple, where employees have been asking for climate-friendly options at some of these places going back to 2016, like before I was even thinking about it for my company. And they've done things like get thousands of signatures on petitions. They've sent hundreds of emails to HR. So it's an issue where a lot of people care. A lot of people want better options, and they all seem to be having trouble for similar reasons to what I was facing as CEO asking a service provider to get it done. And turns out that there are just a lot of very specific requirements when it comes to 401ks when an employer is deciding what options to offer employees, because they have to make their decisions just based solely on financial metrics, risks, returns of a fund, the fees of the fund. And the climate-friendly funds that existed tended to be expensive and actively managed, so they weren't just tracking the market at large, and they tended to be expensive. And so that's why it was so hard to get them in 401k plans. At Sphere, we are making it easy for everyone to invest in a climate-friendly way by offering a simple index fund. It's called the Sphere 500 Climate Fund, and it starts with the top 500 biggest US companies by market cap, and then it excludes the fossil fuel industry, lead contributors to deforestation. We also include private prison operators, weapons manufacturers, and tobacco companies. And with the remaining 410 or so companies left, we vote your shares in favor of any shareholder proposals having to do with climate change. So if a company like FedEx with a big fleet were to have a shareholder proposal saying electrify that fleet, we would vote in favor of that, whereas most of the big asset management firms would vote against that. So it's another way to create positive change in the biggest companies in our economy. And then that fund, it's 99% correlated to the S&P 500 index, and it has low fees. We charge 0.07%. So we really tried to offer it with fees that are in line with what a typical index fund might charge. So people don't have to pay a premium just to invest in a climate-friendly way. And those things make it appropriate for a 401k fiduciary to consider adding to a 401k plan. So it's really the first of its kind in that it checks those boxes of what these fiduciaries look for. And then we just try to raise awareness of the fact that everyone can have a positive impact on climate by investing in a climate-friendly way.
Thanks, Alex. Let's talk about that impact. Remind us the stakes here. How much money is invested in fossil fuels through 401ks, and why does this issue matter?
There are about $30 trillion invested in retirement savings in the US. And of that $30 trillion, about $1 trillion is invested in the US fossil fuel industry. That $1 trillion makes up 1/5 of the market cap of the US fossil fuel industry. And that's coming from people where over 99% of people with their retirement savings have no option to not invest in the fossil fuel industry. So this isn't investors making smart, informed decisions saying this is an industry I want to make a bet on. I think that I will make good returns investing in this. No, this is $1 trillion worth of money coming from people who have no option to invest otherwise, just because the 401k industry has really evolved over the past few decades to this point where index funds are the norm and they invest in everything. And it's really hard to get away from that. And so that's why we think it's so important to offer an index fund that breaks that mold. So it offers the benefits of an index fund, but it doesn't require you to invest in this industry that's in decline. Because the other piece that's important when you think about impact, it's not just that we are empowering the fossil fuel industry by giving them $1 trillion of our money, giving them this social license, which we are, and we need to take that away. But we also are losing money while we're doing it because the fossil fuel industry has had the worst returns of any sector of the economy over the past 10 years, also over the past 15 years, also over the past 20 years. It has had the worst returns of any sector of the economy. It's a very little known fact, and people are surprised to hear that. But it means that people are earning less money for retirement than they would if they didn't invest in this sector. And so that's how we think about impact. It's the divestment, removing the social license so that the fossil fuel industry stops being such a powerful force in politics to prevent common sense laws from getting passed. And then it's protecting our savings. And then the third thing is really just directing the rest of the economy to do better through the power of our shareholder votes.
Alex, you mentioned before that the 401k market is heavily regulated. And there's actually a lot of lawsuits, I learned this from your website, against employers for offering 401ks that are quote unquote too expensive. And so this makes it hard for climate-friendly funds to take off. How are you navigating that?
It turns out that the 401k sector is probably the most litigious part of the financial industry. There are lawsuits all the time, and it's because there are these law firms that specialize in the type of class action lawsuit where employees sue their employers. And the most common type of that kind of lawsuit is the excessive fee lawsuit. So it's for having funds that are too expensive in their 401k. And then the second most common type is the underperformance lawsuit. So if an employer has funds on their 401k menu and they're not constantly monitoring the performance of those funds every quarter, looking at the performance and how it compares to benchmarks and the indexes at large, and then replacing any underperformers, then they also get these underperformance lawsuits. And so we really set up this fund to help employers feel comfortable that this is a fund that's not going to raise those red flags. It's not actively managed. It's going to track the benchmarks. And it has low fees with a 0.07% expense ratio, also called 7 basis points. It's not a fund that's going to raise red flags and make employers feel like, oh, we might get sued for offering this fund. And so that's really a game changer when it comes to climate-friendly offerings for 401ks.
Alex, there's a lot of noise about ESG investing, and the performance that you shared about fossil fuels actually performing quite poorly is surprising, and not a lot of people are expecting that. So how do you navigate this, just the noise about ESG investing and preconceived notions around the expected performance of climate-friendly funds relative to funds that include fossil fuels?
There's a website called Influence Map, and it's these investigative journalists who really dive deep on understanding where is the money coming from that's financing some of the new policies that are getting passed across the country. And they did one on the anti-ESG laws that are getting passed in a bunch of red states. And they did find that it's fossil fuel companies directly financing this legislation to try to prevent state governments from being able to invest pension funds in any fund that doesn't invest in the fossil fuel industry. There's been a lot of money spent by the fossil fuel industry to keep people investing in the fossil fuel industry. And it makes sense because if you look at the past 10, 20 years, they've been losing investments. Endowments, family offices, even sovereign wealth funds have been pulling out of the fossil fuel industry. Some because it's the right thing for the planet. Others, maybe just because they see that the stocks haven't been performing well. It's not a great bet to make when the combination of solar, wind, and batteries is, I don't have to tell your listeners, is less expensive than fossil fuel power generation. Electric cars are popular, they're taking off. And so this is an industry that's in decline, and the smart investors are getting out of it. It's amazing that now the fossil fuel industry has noticed, and they're scared, and they're putting a lot of money and resources into changing the narrative around that. And you'll see this common refrain said over and over again, whether it's on the floor of the Senate or on Fox News, of kind of saying, well, you got to choose between investing with your progressive values or investing for good returns. They're not saying that investing with your progressive values yields low returns, because they know that's not true, actually. Investing with your progressive values has more often than not yielded better returns. So instead of saying an outright lie, they're just saying, well, you got to choose. And it's amazing how it's been working. We do find that people do think they have to choose, that there's a trade-off. If they invest in a climate-friendly way, it means they'll be saving less for retirement. And it's just not the truth. And so we spend a lot of time trying to educate people and really just show them the data showing that this is an industry in decline. Investing in oil and gas today is like investing in the horse and buggy industry 100 years ago when automobiles were on the rise, right? It's an old technology. We have better, newer technologies taking off. But we have a lot of money that we're going up against in trying to change the narrative.
Alex, the Trump administration has clearly been going to bat for the fossil fuel industry, even a bigger hill that you have to climb. Does that hurt your investment thesis?
If you look at the past 10, 15, 20 years in fossil fuel sector returns, it's had the worst returns over those time periods, and it's also had the highest volatility. And so something that's really typical of what they call the energy sector and how energy is typically defined is that it's just fossil fuel companies because solar and wind go into the tech sector. If you just think about how the energy sector has behaved over those longer term timeframes, it's been the most volatile, which means that it's had some of the highest highs, and that gets a lot of press. And so right now, I think energy is doing pretty well ever since the Trump administration took over. There are other time periods where energy has done well because of various policies, but they tend to be really short-term time periods, and then it drops off a cliff again. And then when you look at the longer-term timeframes, it ends up being not looking good for that sector. And so these policies, it's interesting. So far, one thing that happened a lot during the last Trump administration And we founded Sphere right towards the end of the last Trump administration. They had a big focus on trying to outlaw climate-friendly investing in 401ks specifically. But they didn't change the fundamental law, which has been around since the 70s or 80s. What they did was the Department of Labor, which regulates 401ks, put out guidance interpreting that law, trying to make it really clear that climate-friendly investing is not okay because investing with your values is not okay because you just have to make decisions based on financial factors. But the reality is that's always been the law, and it just makes financial sense to not invest in fossil fuels. And so that's where the approach of our fund makes a lot of sense. And so that guidance out of the DOL hasn't really negatively impacted anyone looking at our fund. I will say it made 401k advisors wary back when that happened. They were like, oh, we don't know if we're allowed to do this. But in the interim time period, from the last Trump administration to the Biden administration, now back to Trump, the attorneys that focus on 401k law and are educating 401k advisors and fiduciaries on what to do have really gotten the message across that the fundamental law hasn't changed. You have to use financial factors in making decisions. And that has not changed across political administrations. And at this point, most 401k advisors realize that. They know that. They're like, okay, politics is crazy, but I'm going to keep doing my job, which is making sure we choose options that are good based on good financial footing. So I do find that we're not experiencing the wariness that we were a few years ago on this topic. And people are much more heads down. And there is just a lot of demand for this. I think individuals are really realizing what an impact they can have on climate change through their investments, and they're requesting this on their 401ks. And somehow people realizing that they can't really control what's happening in Washington right now is making a lot of people turn to what is within their control. And we're getting a lot of phone calls from people saying, okay, I've been meaning to do this for a while, but now I'm actually doing it because Washington's crazy. I can't control that, but I'm turning to what's in my control, and I can't control my money. So let's do this. So we're getting a lot of customers actually right now, I think, as a pushback to what's happening in Washington.
Let's go deeper into your experience. I'm glad to hear that things are going well. Let's hear a bit more. So it's been 3 years since we talked. How have things been going? Tell us some of the highlights of what you've been able to achieve.
Yeah, it's amazing. We talked so early in the life of the company. We just hit our 3-year anniversary. And that's a big deal in the world of finance because a lot of financial advisors, 401k advisors won't even consider a fund for investment if it doesn't have a 3-year track record. And we've just hit that, which is really a big deal. Yeah, for being able to be considered for a lot more 401k plans. And so we've started taking off in terms of asset growth. We were added to a bunch of 401k plans prior to this. And it was by 401k advisors who were willing to make an exception to that 3-year track record rule. And they were like, okay, we can look at your 10-year back test. Let's analyze this. Let's figure it out. And they made it happen. But now we can really go mainstream. We've been added to most 401k platforms at this point in time. So when we started this company, at first I was thinking, oh, do we start a 401k platform? Is that the way to solve this problem? And we ended up realizing actually the gap in the marketplace is climate-friendly funds that check the boxes. It's not platforms the platforms need to do the right thing. But if we can get a fund that checks those boxes of the fiduciaries, it'll get added to the platforms. And we found that to be true. Now we're on the biggest 401k platforms out there. We're on Vanguard, we're on Fidelity. We just went live last month. We're on ADP, Empower, just a ton of the platforms. We're on most of them at this point. And so that means when companies ask their 401k providers to add us, it's a pretty easy just on switch. They can just add this fund to their lineup.
And you've seen some impressive growth. I saw that's almost 400% year-over-year growth last year. What does that mean in terms of number of clients or dollars invested?
So we're on a few hundred now 401k plans. We've been growing like crazy, especially towards the end of last year. I think it was a combination of the election and people turning to what's within their control. We also got featured on NPR. That probably helped. So we more than doubled in the fourth quarter of this last year in terms of assets under management. And that growth is coming not just from 401k plans, but actually a lot of individuals just opening accounts with us, investing directly, whether it's through a brokerage platform or just opening an account directly with us. We've been seeing a ton of growth in that as well.
Alex, let's break this down and make it really clear for folks. What are the ways people can work with Sphere and what actions can they take?
Yeah, totally. So when people ask, what can I do personally? I always tell them first, look at the money that you control entirely. So the money that's not with your current employer's 401k is entirely within your control. You can invest it however you want. And so if you have a 401k from a prior employer, you can do something called a rollover to an individual retirement account. It's a traditional IRA is what that's called. And you can open a traditional IRA account directly with Sphere, or you can open one with Vanguard or any other platform and then just select Sphere within there to invest. So we get a lot of investors coming in that way. There's also something called a Roth IRA, which is for people who are fortunate enough to be able to save money in addition to what they do through their employer plan. They can put that in a Roth IRA. And so these are just different types of accounts that people can open either with us or with another platform and then invest in our fund. And because it's not part of an employer 401k, there's no fiduciary there saying, hey, here's a short list of maybe a dozen funds you had to choose from. The whole world of options is your choice. And then you also don't have to invest in our fund through an IRA or retirement account, like really literally any type of investment account. You can open any kind of investment account to invest in our fund. It's just a mutual fund. So anyone can invest through any type of account.
Alex, you mentioned that people were hearing about you through the NPR story. I know that you also ran a viral campaign and had the support of some celebrities. Tell us about that campaign, what you learned, how it worked, and who was involved.
Yeah, we did something called the Virtual March to Retire Big Oil last year. And anyone could participate from anywhere by uploading a picture of themselves to our website. And then we generated an image of you marching down Wall Street along with everyone else participating in the march. And we got fun with it. You could choose to be marching with a bunch of wildlife and animals, like parrots flying along with you and elephants and giraffes, or you could make it be set in a futuristic scene. And people just started posting this on Instagram, on LinkedIn, all over social media. And we got participation from a bunch of big celebrities as well. So we ended up reaching over 25 million views with that campaign. And I think it really was the first time that a lot of people found out and really started thinking about the fact that, oh, if I have retirement savings, I'm invested in fossil fuels and I can do something about that. I think a lot of the people who we were hearing from when it was election time and they were disappointed and realizing, okay, the politicians aren't going to save us, had heard about us earlier in the year with that virtual march and were finally taking action later. So it's been really wonderful for raising awareness. And we have another campaign coming up soon that's also going to be working with some of those celebrities that participated in the virtual march. And this one is going to be working with actors in particular. And I'm really excited to see where this goes.
Amazing. Alex, one of the things that I love about Sphere is that what you're doing is so obvious, and yet you're able to really push people's thinking. And that's because most people don't know that their money is invested in fossil fuels through their 401ks and that they often have no choice in that matter. What have you learned about communicating this systemic flaw in a way that helps people both feel empowered to have systemic impact, but also not feel too small to make a difference?
I do really love this topic in that it's a place where you can have an outsized impact. It's in a few ways. First of all, just the fact that the single biggest thing you can do to improve your carbon footprint is to move your investments. Just not investing in fossil fuel companies dramatically reduces your carbon footprint and has a bigger impact than putting solar on your roof, getting an electric car, going vegan, never flying again, all of that combined. So it's just an immensely impactful thing, and there's no trade-off. Anyone can do it without having to pay more money or lose out on saving for retirement. So that's impactful. But then when you layer on top of that, the impact people can have within their sphere of influence, it's really inspirational, especially for the employees we're working with at companies like Apple and Microsoft and Google. But even if you're not at such a huge company that has tens of billions of dollars in a 401k plan, you could be at their companies like, HubSpot, Airbnb, companies that have still hundreds of millions of dollars in a 401k plan. And if you can get a climate-friendly option added, it's not only just for you, it's for your colleagues too. And you can end up moving millions of dollars, in some cases, billions of dollars out of the fossil fuel industry, taking that power away from the fossil fuel industry and also helping save your colleagues money from this really risky industry. So it's something that is very doable for people to do within their own spheres of influence. And even if you don't work at a company that's big, or if you don't even have a 401k, we see parents in California, in Oregon, and Massachusetts working together to get a climate-friendly what's called a 529 college savings plan for their new babies that they just had born and they want to save for college without investing in the fossil fuel industry. There are a lot of different ways people invest money. And it turns out you can really influence the decision making of what this small pool of options is that's offered to people if you just show up at the California 529 committee's quarterly meeting and ask for it. People can feel very empowered to create real change in the world. It actually doesn't take much.
Let's talk about that process of actually pressuring a company, or let's say educating a company to offer sustainable 401ks to their employees in a moment when there's layoffs and there's concern about holding on to jobs and about not standing out for being an activist within a company. What have you learned about folks finding strength in numbers in terms of best practices, in terms of their success rates, and in terms of it not reflecting poorly on their role at their company?
We find that companies, there are two things that really drove me when I was first thinking about starting this company. And one is that HR really does care about keeping employees happy. And that's true even during tough times, right? When there are layoffs, they don't want to be losing the employees they have, right? Like it always costs more to hire a new employee than it does to retain the employees you've got. And offering values-aligned investment options in a 401k is one way that companies can show that they're not just talking the talk when it comes to climate. They're actually enacting the values, and it can create a huge amount of employee loyalty. And so that can be a huge benefit for HR teams, and they see that. The other thing that's really interesting is it turns out 401k advisors, these people who are the most influential components of the decision of whether to add a climate-friendly option in a menu, at the end of the day, they want to keep their clients happy. So what we usually see happen is employees ask their HR for a climate-friendly option. HR goes to the 401k advisor and says, hey, we have employees asking for this. The 401k advisor is like, oh, okay, let's put this on the agenda for the next quarterly meeting, and they discuss it. And so it's something where they tend to take the request seriously. And if enough employees are asking for it, they're going to want to do it. We've had cases where, like, for example, the 401k advisor for one company also happened to specialize in the niche of oil and gas companies and providing financial advice for oil and gas company employees. And so the advisor was really like not aligned with what this group of employees wanted at a company. Yet they still added the Sphere Fund to the lineup despite that, because they didn't want to lose the customer at the end of the day. Like, this customer was not an oil and gas customer. It was just a tech company unrelated to climate or oil. And they didn't want to lose the customer. So they did it to keep their customer happy. And the executive team wanted to keep employees happy. And so they did it.
Alex, before we mentioned that you're currently raising money, including through an equity crowdfunding campaign on WeFunder, tell us what this round will enable you to do.
Yeah, this is something that's very close to my heart because this is my second company, and I want to make sure that I do it right, especially when it comes to our cap table. With my first company, we have a not very diverse cap table. We've made a lot of people who are already pretty wealthy more wealthy. And I want to make sure that we are bringing this opportunity to invest in an exciting new company to more people and more diverse people. And I'm excited these crowdfunding campaigns and their ability to make these options available to more people. And yeah, we have this campaign live on WeFunder. The money that we raise here is making it possible for us to make this fund available to more people through a couple ways. One is we're planning to launch a better flow for letting people open an account directly with us, so that right now it's like this kind of antiquated mutual fund process of sending in paperwork to open an account with us. And so we're bringing that all online, and this crowdfunding campaign is making that possible. And then it's also making it possible for us to launch an alternative version of our product that will make it possible for us to get on more brokerage platforms. So basically just more availability for more people in more places.
How is the raise going? How's it coming along?
It's going really well. And something that's been really amazing to me is it's not just bringing in investments from people on the crowdfunding platform, but also from people off the crowdfunding platform that I didn't even realize were excited about investing in us. The crowdfunding platform is really intended for people who are not accredited investors, so people who don't qualify to do angel investments on a bigger scale. But it turns out there were a bunch of bigger angel scale investment type people who wanted to invest in us as well and didn't realize that we were fundraising, but once they saw the opportunity, decided to. So it's been fun to see all the people who are so excited about our mission, both on the platform and just coming out of the woodworks from our community.
Alex, we've kept the conversation pretty positive. Even negative headlines about ESG or climate investing in some ways creates opportunity for you. I'm sure there's also been some unexpected challenges. Tell us a bit about some surprises that you've had to deal with and what you've learned.
Yeah. When we first launched, it was probably the worst possible time to launch a climate-friendly fund that excludes fossil fuels, because we launched in October of 2021. And soon the next year,
War in Ukraine.
Putin invaded Ukraine and oil prices skyrocketed. And so for the first year of our fund, we had worse performance when you compared us to like an S&P 500 index, which we knew was always possible, right? Like the markets are impossible to predict on the short term, but we also had all this data showing that over the long term, it should even out. So that was a really hard time trying to sell this concept in a time when all the headlines were just talking about how oil's on a tear and look how these investments are providing so many returns. And it was also just not having a 3-year track record, not being on most 401k platforms. It was a tough first 3 years, I will say, overall, of just trying to grow with just all these tailwinds, or headwinds, I guess is what you would call that. And so, I have a friend, she's an advisor to us who runs another fund product. And she would always tell me, just don't shut down. Like, just keep it going. Things will turn around. Just don't shut down. The most important thing, you need to get that track record, that 3-year track record. And then a 5-year track record is also a big deal. And so I just always had her voice in my head of like, okay, we got to figure out a way to just keep this going until it hits that inflection point. And in the second year of operating the fund, exactly what the volatility and underperformance longer-term data tells you will happen is what happened. Oil prices went back down. Oil stocks did badly, and our fund comparatively did well. And so made up all the losses that we saw in the first year. So things have been on the up and up slowly. The other thing that happened at the same time as the war in Ukraine was this war on ESG, that really the culture war, and this kind of fabricated culture war, I should say, because it's phony in that it's not regular people being like, we hate ESG. Most people have never even heard of the term ESG, let alone can they define what those 3 letters mean. We did a survey, and out of multiple choice, 70% of people could not say what ESG stands for. And the most common answer was economic stock growth. So regular people have no idea what this is. It's a manufactured war on ESG by the fossil fuel lobbyists, but it did start being manufactured probably 6 months after we launched our fund. And so we had the oil prices skyrocketing, and then we had this war on ESG happening. And just over and over and over again, people saying, well, you got to choose between investing with your progressive values or investing for good returns. And so that was really when we started realizing, you know what, we need to take a hold of the narrative and really push back. We can't let them win this narrative. They're just wrong. We know they're wrong, but most people don't know they're wrong. And so that's when we started hatching the idea of the virtual march to retire big oil, and started really thinking about how do we work with celebrities and how do we really get the word out to push back on this very smart campaign of the fossil fuel industry. It was a tough first 2 to 3 years for sure, and we learned a ton from it. I'm very proud we didn't shut down. I'm very grateful to the early investors who made it possible for us to launch the fund and to keep it going. And now we are at that inflection point where we're just seeing huge growth. And I'm sure there will be more bumps in the road.
Well, congratulations on hitting that 3-year milestone.
Thank you.
Tell us what the future holds. How big of an opportunity is there for you, and what do you think you need to do to get there?
At the end of the day, all investing should be climate-friendly investing. And it's wild how many people I've heard say that they go to their financial advisor and they say, hey, I want to stop investing in fossil fuels. And they're essentially told, you can't. Even if it's not in a 401k, like the financial industry, the people who've been around in it for the decades are really just preventing regular people from investing the way they want to. They keep telling them they can't, even though they absolutely can. It's their own money. They can invest it however they want to. And so the future we see is one where regular investing is climate-friendly investing, where that's just the default for everyone. And we're starting with 401ks because 401ks are where most people are first introduced to investing. And we're building our brand to be a well-known brand within the world of 401ks, because then we know that when people go outside their 401ks, they're going to look for those brands that they know and trust because their employer offered it in their 401k. And at the end of the day, we want to be the next Vanguard, the next BlackRock, the next major company that's offering trustworthy investment products for people to save for retirement. and they just happen to be fossil free, and they just happen to vote in a way that's aligned with your values, because that should be the no-brainer. It should be how everything is. It's crazy that over 80% of Americans are worried about climate change right now, but over 98% of the time, their shares are getting voted on their behalf against these climate-related shareholder proposals at all the biggest companies in the economy. The future we see is one where people's values are reflected in how they are directing the biggest companies in the economy to behave through their shareholder votes. People are not forced to invest, and they're not investing in an industry that's in decline. And we're all just investing for an economy that supports the planet and us as human beings living on it.
Alex, thank you for returning to the podcast and for updating us. Best of luck with the company, with the crowdfunding campaign, and for all the impact that you're creating.
Thank you so much for having me. This is fun.
Thanks for joining us for this episode of Invested in Climate. Please remember to rate us on Apple, Spotify, or Google. Find show notes, sign up for updates, get in touch, and visualize your climate action at investedinclimate.com. This podcast is for informational and entertainment purposes only and does not constitute financial, accounting, or legal advice. Thanks again.